Welcome to the 4-minute morning for today, Crypto Day, Thursday, the 22nd day of March 2018. Like always, everything within your own risk, own reward. Bitcoin on the daily time frame, starting when it broke above the 18 average on February the 15th, managed to make a double top formation, which is that of two reverse U's, two reverse V's, and you can be creative with a shape name for it as well. But when it broke down below support, it had a move piercing below the next key line. So that pattern fell into play. That's no longer important to me, as the price has now rallied from the lows. It has came up to the 18 average of highs. It is resisting it so far, but it's now in a very interesting situation. The 18 average of lows, it's not flattening out yet, but it's very close. If price action can hold where it is now, then it will definitely start to do so. If price action can maintain up to the 18 average of highs, the 18 average of highs will flatten out. But as far as bear markets are concerned, when you make patterns of lower lows, lower highs, or make new legs lower each time, thus a lower low, it's very common that you're going to find resistance amongst this area. And because it's declining, we cannot deny the fact that the bears could end up winning this battle. The 18 average of lows is coming in at 8,300. So I think that's going to be very important. It really is, to me, the must hold. I mean, it can pierce below it a bit, but it's the area of the 18 average of lows that if it holds as support, band flattens out, then it becomes more of a neutral game than anything of a bearish situation. And it's going to come down to, will it break 9,100 to try to establish a bullish scenario? Because within the range of 8,200, 8,300 even, to 9,100 is very much neutral at this stage. Okay, let's take a look at this on a shorter term time frame. On the 400 minute, here's a situation of a rally breaking above this resistance field a couple days back, and now it has come down to the 18 average of lows. It's an area of support that I'll be looking for. Again, breaking the resistance is big, up around the 91 and change barrier, and I'm not too majorly concerned if a market pierces below the 18 average like this when it hasn't established a low from the last breakout. So if it goes down a little bit further, as I mentioned with the daily chart, it's still fine to come down to the 8,300 area, but there really isn't many lower areas that I can look for. And 8,300, of course, would be a small pierce below the 18 average of here. It would also match up with the resistance from the 15th of March. Finally, looking at this on a long-term 15-day chart, practically a half a month chart. And a lot of people are saying that this price action going down is like destroying this market. And on the long term, it is, well, bands flattening out. It's in a correctionary phase. So a big moment in here. 18 average of lows, I don't think is really too important. I think in this time frame, it's going to be the key support at the 6,000 area for it needs to hold. If it fails to do such, we're looking for at least the next leg to go down to a 38.2% Fibonacci retracement at a little over 3,000, or it could pierce below extra. That's normal. 18 average of highs here I think is important, and that's in at around 11,700, even 12,000 as a nice 12,500 even as a level. As it can get above that, then it would be exiting and finished with its correctionary phase. At least it would look for such, and that resumption in a bull market. And whenever you leave the 18 average like this in any bullish format after a good correction, I get pretty enthusiastic for a decent leg higher. Thank you for tuning into today's video, and have yourself a great day. Bye-bye.